to NAB, our stock of the day, reporting that its cash profit rose 17% to just over $4 billion in its half-year result, declaring an interim dividend of 83 cents a share, up from 73 last year. But that's below expectations for a first half cash profit, coming in expected at 4.2 and interim dividend of 86 compared with 83. NAB also making the decision to step back from its mortgage wars, with its personal banking profits down 0.4%. It is instead focusing on business banking, earnings there growing by almost 20%. And taking a look at the share price, it has been hammered this morning. As a result, we're just taking a look at the intraday move. It's off it's down to 6% now. Was at one stage closer to 7% down. That did drag the other big banks with it. At one stage, CBA was off 3. It's now off 1.8. Westpac still down 3. ANZ 2% lower. So Luke, how do you look at NAB, I guess, in that basket of the big four banks?
Yeah, well, I'm a small cap investor, so a 6% move in a day, it's a paper cut. But for a $90 billion systemic bank, it's, again, maybe signaling some noise here. It's interesting, as you said, the results weren't too bad. Double-digit profit growth, below those expectations, but I think it was the commentary in the outlook that might have spooked the market a bit. Net interest margins came in under expectations, and the main reason I could see on a quick read was calling out the competitiveness of the home loan market and not being as willing to go in and undercut and sacrifice some net margins that maybe some other peers are doing. So you get a little bit of contagion, when one of the big four says this is how we're seeing things, it looks ultra competitive, and questions become, are you writing good loans basically at the margins that they're currently pricing? And some people start to think maybe they aren't, and there's potentially some blow-ups that could happen down the road. Look, as far as a buy, hold, sell for the program, I thought the result was okay, obviously below expectations, outlook cloudy. I don't think if you've held NAB or for a long time or currently hold it, I don't think you're rushing to sell on this result. It ticks all the boxes you're looking for as far as dividends and the steady growth that you want. So I think you hold it. I don't think you have to panic and think there's any sort of systemic problem with the Aussie banks on a result like this. But no doubt it's an example of expectations and the market we're in. You miss expectations, you get hit hard.
Yep. Okay. Grady, how do you look at it? And I guess your assessment as it fits, with its peers in that sector.
Yeah, absolutely. I think it's definitely a hold at the moment. We're going through a bit of turmoil in the banking sector, so any news in the banking sector or any kind of signs of bad news are taken as bad news. And as Luke said, the results weren't actually that bad, but as soon as someone starts selling, everyone starts selling. It's kind of a waterfall effect here. What we noticed was that the net interest margin is coming down, so it kind of indicates that net interest margin has peaked in the sector, especially for NAB. So it's at 1.77%, which was 7 basis points below Citi expectations. Again, they also, when we're looking at banking results, we're looking for bad and doubtful debts. And that is exactly what we saw. I think that's one of the reasons investors may have been spooked today, because they had higher bad and doubtful debts the first half. So that rose to 393 million, which was well above Citi's forecast of 244 million. So they're expecting a lot more defaults to come through. We're also seeing another thing that was noted was they're seeing a lot of switching and mortgage competition. So a lot of people are switching their deposits, and everyone is really reactive to what's going on. Who has the best? I think now more than ever, people are paying attention to how their deposits are faring. So they're going, oh, well, NAB's a tiny bit less than CBA. I'll jump in with NAB, or I'll jump in with CBA. So it's like everyone is finally taking a step back and looking at what's happening to their deposits. So
easier to move your deposit than it is your mortgage.
Exactly. So I think mortgage switching could be on the horizon, but definitely deposit switching is a big one that they noticed as well. So we could see there could be further downside to net interest margins moving forward, but yeah, those could have been the factors that spooked the market today. So a hold at the moment, because we like to think long and act long.
Yep. Okay. Any particular preferred bank for
We don't really cover banks. So I know Citi covers banks, but no, we're not. Can't really answer that one because Bell Potter's more. We've got a different horizon.
Well, in fact, we're going to get into those stocks that you guys cover. So let's go there.
Let's do it.
All right, our first stock